What's up everyone, it's Karthik with MoneyVest. So in this video, we are going to be talking about Tesla stock. It's going to be a very detailed update on this company. And unfortunately, Tesla missed its deadline on the V13 update. They sent out some updates about where they are with the version 13 of the full self-driving, which was supposed to come out in the month of October. It's getting pushed back at least one full month. So I'm going to break down exactly what the consequences are going to be for this, and talk a little bit more longer term of what 2025 and 2026 is going to look like for Tesla. And of course, as a lot of you guys have been asking, a full detailed technical analysis on this company to break down exactly where the stock might be headed next. As always, make sure that you drop a like and subscribe to the channel if you haven't already. The first week of the month is the best time to join our Patreon and Discord. You get access to the MoneyVest website, the Patreon, which includes your members only videos, options portfolio updates, as well as the Discord channel that includes all the trade alerts, as well as a lot of market updates as well. So link's going to be down below. We'd love to have you on board. If you have any questions, please feel free to reach out. Now, Tesla is trading at just under $249 per share. That's where it ended up closing on Friday. And this is actually a good thing because I had sold calls, as you guys know, in the 220s. That was right before the earnings to get a lot of premium. And then I rolled those calls out to February of 25, right? Because I had a buy right on Tesla stock. I have other shares in my long-term portfolio, but in the options portfolio, I've got 100 shares with a call that's now sitting at 250 strike. That's where I rolled up to from 220 to 250. And it's now back out of the money because Tesla's trading back below 249. Of course, between now and February, a lot of things are going to happen. So Tesla is going to be very volatile in the next 5-6 months here. But nonetheless, I can close that call out for a nice little profit. Of course, if Tesla continues to sell off, the goal would be to be in profit at least over 90 to 95%. And I received just over $2,934 for the call that I sold. Now, this right here is all the premiums that I've collected from trading options on Tesla. And this is literally not even 1 month old. It's actually exactly 1 month old because this is all the premiums I've collected in the month of October. And I'm recording this video and it's November 2nd. So, collected just over $2,450 by just owning 100 shares of Tesla. And the reason why I like to really run the wheel on Tesla is because take a look at the entire pattern. I mean, this has just been trading sideways for such a long time. And that's why Tesla makes for one of the best stocks to be trading options on because of this consolidation. Because it's been trading in that range, it makes for very good premiums, both on the call side as well as on the put side. And if you take a look at the beta, which is a good measure of a stock's volatility, come down a little bit, it's got a beta of 1.71. So it's not super volatile, not as much as Nvidia, which has got a beta of almost 3, but it's also not less volatile as like Microsoft or an Apple that have a beta of less than 1. So it's kind of like fits that sweet spot where 71% more volatile than the S&P 500, has been trading sideways for a really long time, and you've got a nice little tidy profit or premium of just over 2,400 in the last 1 month of just selling puts, selling calls, right? So $717, buying it back for 24 bucks, selling for $466, buying it back for $1, selling for $174, buying it back for $2, so on and so forth. So again, links going to be down below if you want to get access to all the options portfolio. These are the updates that I share with everyone in the community every single week. But let's just come over to the meat of the content here. So Tesla has given an update on its self-driving roadmap, and it has confirmed that its FSD V13 update has been delayed into the next month, and it makes more promises. So this was Electric's take on Tesla's missing that deadline on V13, which was not the best. It was very bearish in terms of their opinion on how Tesla's progressing in their FSD update, which I'm going to talk about later in the video as well. But in the original roadmap, Tesla stated these goals for October: unpark, park, and reverse in FSD. So that was a very, very important update that was supposed to come out because, as I mentioned in my previous videos, there was another FSD, one-person view update for Tesla unsupervised driving, and one of the biggest challenges where the driver had to engage or really disengage FSD and really had to engage in helping the vehicle was reversing, because Tesla had came to a roundabout, and as it was turning or making a U-turn, it kind of came very close to the curb, and it wasn't able to shift into reverse, pull out in other words, reverse and then pull out of that spot, it was kind of stuck there. So that was version V12.5.6. So although it's been a huge update, right, for Tesla that came out 8 months ago, and it's been very much loved by Tesla owners, and there's been so many updates that have seen significant improvements in FSD, there were still some quirks here where Tesla was not able to unpark, park, reverse in FSD, things like that. And V13 was supposed to come out with a 6 times improvement in miles between necessary or critical interventions or disengagement for the FSD. Now, with October coming to a close and it's already over, Tesla has released an update. The automaker says that it has accomplished this on its AI roadmap this past month. End-to-end on a highway has shipped to 50,000 customers with the 12.5.6.1 Cybertruck build that improves responsiveness, and finally, of course, successfully hosting the We Robot event with 50 autonomous Teslas, including 20 Cybercaps and 30 Model Ys and Model 3s, I think, and transporting over 2,000 passengers with hundreds of rides with unsupervised FSD, of course, in a very, very controlled studio, which was the Hollywood studio, and essentially driving around in that lot. Now, as for what's coming next, Tesla now says that the end-to-end highway driving is coming next week, but only for Tesla owners with hardware 4. So hardware 3 people that are the older models are unfortunately going to be screwed in some way because they're only stuck to the V12.5.x models and for AI3 city driving, but AI4 is going to be rolled out, which is end-to-end highway driving with the neural networks to hardware 4 vehicles targeted for early next week, including enhancements in stop smoothness, less annoying bad weather notifications, and other safety improvements as well. And they also noted that the actually smart summon will be released to Europe, China, and other regions of the world without any clear timelines as well. And this right here is the very important update, which is the V13 that was supposed to come out, which now the automaker is claiming, which will include, which is Tesla, about a month later, 36 hertz of full resolution AI4 video inputs, native AI4 inputs and neural networks architectures, 3x model size scaling, 3x model context lens scaling, 4.2 times data scaling, 5 times training compute scaling, much improved reward and predictions for collision avoidance, traffic controls and navigation, efficient representation of maps and navigation inputs, audio inputs for better handling of emergency vehicles, and redesigned controller for smoother, more accurate tracking as well. And finally, as for the pace of improvement, V13 is now at least a full month behind schedule, and we don't know if it will actually result in a meaningful improvement in miles between disengagement. Even if it does, Tesla still needs about several more updates that bring order of magnitudes improvements in miles between disengagement. Considering the fact that V13 is now scheduled to come out 8 months after V12 and 4 months after V12.5, the pace of improvements looks to be nowhere near what Tesla needs it to be to achieve its stated goal of 600,000 miles between critical disengagement by second quarter 2025. So Electric finally closes out by saying it remains a pipe dream in my opinion, which is based on the best data available. I will change my mind as more data comes in. So there's one thing that I really want to address here, and that is the pace of technology, right? Tesla is trying to solve something that no one's ever solved before, right? It is fully unsupervised driving, right? Simply based on vision, right? Which is your camera-based Tesla vision. Now, when I say it's not been solved before is because some people would say Waymo is a perfect example of autonomous driving, right? It's not been supervised. It's kind of taking people to their destinations. It's actually functioning. They've made it to market. But I think it's not a fair comparison, as I mentioned before many times in my previous videos, is the biggest difference is that Waymo is a service, right? Waymo will always be a service. It will always be a service provided to customers, whereas Tesla is solving for a product, right? Tesla is actually solving for a product. And not to mention, we can go into a lot more detail, but there's significant differences in cost, technology, efficiency, production, scaling, training. There's just so many nuances here that we can compare between Waymo and Tesla. And I've written, in quite detail at length in our Discord why Waymo is not a good comparison to Tesla, because they're both using different sets of technology. They're both operating using a very different technology, and of course the cost and the scalability and the production and the training, everything is completely different to what Waymo is doing with radars and lidars with actual lasers versus what Tesla's using, a camera-based vision system. So with Tesla, of course, I have to be very objective, and Tesla missing their deadlines is never a good look. But as a Tesla shareholder, as Tesla investors already know, it's kind of it's habitual, right? It's almost always certain that whatever timelines are put forth for Tesla, you got to put in a grace period of at least a few months, if not several months out, that Tesla's going to be able to launch it. Why? Because like I said, it is a really, really complicated stuff what Tesla's trying to solve for, right? Unsupervised, full self-driving for vehicles, simply using camera vision and being able to train for every single scenario out there is incredibly challenging. It is very, very difficult, right? Because there's infinite amount of scenarios out there. There's infinite amount of situations that a car can be in. And one more thing I'll point out is that Waymo is not fully autonomous, right? It's got people behind the scenes kind of also navigating and engaging with the service that they've got to provide. And, we just learned from Sundar Pichai in the earnings call from Google last week, where he was talking about Waymo is growing 150,000 trips every single week. So the demand is very, very strong. And again, what Waymo is really doing for Tesla is validating the market. The market's very strong. There is definitely a need for this. And so when Tesla comes to market, think of it more like an Airbnb model, where if you've got a vehicle, of course, you're going to be able to generate revenue. And at the same time, you're going to be saving tremendous amount of cost because A, affordability is going to increase, which is going to be my next point. And B, the cost of maintenance is significantly lower as well, right? Electricity costs, in many cases, if you got a supercharging network, it's literally next to nothing. And there's a lot of other costs that are not really needed in an electric vehicle versus an ICE vehicle. So you've got lower costs, you've got more potential revenue, and that comes out to be one of the best, in my opinion, products that I would personally like to own. So that right there is why, in my opinion, Tesla is playing a much, much longer game versus companies like Waymo, owned by Google, that are playing just first to market, first to revenue, still burning through billions of dollars worth of cash. And so, the moment Tesla comes out, in my opinion, there is going to be profitability right from the beginning. Now, Tesla's 20 to 30% growth target is obviously what got everyone super excited, but a lot of people do not believe, and including myself, I don't believe 20 to 30% is possible, given there's still a lot of headwinds for Tesla to come out of. Like, there's a lot of regulatory measures. 360 to 540,000 vehicles. I'm sure Tesla can produce that many vehicles. Can they deliver that many vehicles? That's the real question. I think production capabilities are pretty strong. It just comes down to whether the demand is going to be there for that level of deliverability. Now, Tesla's affordable models. Now, this is the most exciting part for me, is because as cost comes down, there's going to be that mass adoption, that scalability for Tesla vehicles, because, this is really, below $30,000 is when we're talking, multiple millions of vehicles owned, Teslas all around the world. Right now, we are just over 7 million, right? That's the install base for Tesla, because that's how many vehicles they've produced now, or I think delivered, and bringing costs to below 30,000, possibly 25,000 is going to be the real game changer. But it's also very difficult to do because cost reduction, as Elon Musk mentioned in the earnings call, is incredibly challenging. And of course, missed deadline on the FSD V13, but like I said, it is an incredibly difficult thing what Tesla's doing. No one's ever done that before. And so it's going to take time. It's not like they're completely getting rid of it. It's coming. It's just going to take some time. And that's why, in my opinion, it is really more of a long game than anything else. And mass production, scalability, training, and technology is Tesla's game here that they're trying to play long term. So for me, it becomes an incredible stock to keep running the wheel strategy, generate some nice premiums, collect the premiums while Tesla continues to trade sideways. And then eventually, if it starts to run higher, breaks out over 270, that's the biggest critical resistance that Tesla's not able to break out of. So if you come take a look at this chart, what do you see? Like, what is the one price that Tesla's never been able to break out of in this exact moment right now? In this frame, what is the level? Tesla's struggling. You can pretty much call it out, right? It's literally 270. Every time we come up to 270, we're just not able to absorb all that supply. It's happened now once, twice, 3, 4, 5. This is the sixth time Tesla is struggling to break out over 270. And if you were to go back a little bit further, in July of 23, so well over a year ago, we kind of tapped out at $300. So anything inside this red rectangle that I've marked out on Tesla's chart is a clear area of resistance and supply. We're just not able to break out above that level for God knows for what reasons. There's a lot of resistance, supply, a lot of shares sitting on the sell side. We're just not able to absorb all that supply here, and as a result, we start rolling over. Now, Tesla also doesn't have any catalyst coming up to push that momentum back up. There's going to be literally nothing. I mean, elections are next week, so that could possibly be a Tesla catalyst. I don't know. Elon Musk has been very vocal from his political standpoint, endorsing Donald Trump. But again, I don't want to really go there. But from a Tesla specific point of view, I really wanted to break down some of the details and what's coming and what's not. And 270 is a big resistance, and we got a huge gap to fill post earnings, which, given the momentum, given the kind of fade out of this entire move, it's possible that Tesla trades back below 240s, down in the 230s again. And at that point, I will be looking to cash out all the calls that I sold as a hedge for that downside. The call that is sitting at 250, and then I sold another call, which is 2 years out, in the $300, and that can also be further out of the money and back in the profitability zone if it trades below some of these levels. So, in the short term, I would really keep a close eye, of course, at this resistance at 270. We got a reasonable support here at 205 down to this level here in the 180s. So that's really the range within which, that's the $100, $90 range within which Tesla's been trading for a really long time. And I wouldn't expect anything else. Breakout over 270, I think is possible when Tesla comes out with some significant updates related to, FSD v13, significant improvement in miles between disengagement or intervention, coming out with more affordable models, Optimus mass production, Cybercab mass production, which we know that is going to happen in 2026. So these bigger catalysts, these revenue and earnings driven catalysts, is what's really going to drive a lot of institutional involvement and liquidity push past 270. I think that's really the most important key there. But until then, Tesla is one of the best tradable stocks, in my opinion, out there. So let me know your thoughts down in the comment section below. And my personal plan is going to be continue to trade this as it continues to trade sideways. Trade calls, trade puts, both on the up and the downside. And support levels 205 down to 182, resistance at 270. Again, if you want to get access to all the trade alerts, find out exactly what I'm doing, how I'm trading this stock, link's going to be down below. We'd love to have you on board. And as always, happy investing. I'll see you all in the next video.